what I would like to do now is to introduce each of our panel members. And maybe if I can start with you, Jan.
Sure. Great honor to be here. Third year coming here. Helped organize some trade missions in the very beginning with the Chambre de Commerce de Montréal, who was in the office, and Finance Montréal as well. It only took 3 years for me to convince the great organization here to let me on a stage, so fantastic. I'm the managing partner of Holt Fintech Accelerator. We see thousands of applications in the pre-seed, seed, everything before Series A stage. We invest in those companies. We have about 18 active investments at this point. We do it in a cohort basis, and we try to essentially broker deals with our 300 plus advisors who are either financial institutions, investors, or experts in the space.
Hi everybody, my name is Antony Cahill. I'm the Managing Director of the European region for Visa. So I lead 35 of our 37 countries in Europe. On top of that, I'm accountable for Fintech and a number of other activities in the organisation. Quite new to Visa, so prior to Visa, just over 14 months ago, I was one of those big corporates. So I was the Chief Operating Officer of one of the banks in Australia, where we were undertaking a $6 billion transformation program, and as part of that, I was accountable for our Fintech ventures innovation activities. So hopefully it'll be an interesting conversation today.
Perfect, yes. Ekaterina.
Yes, hello, my name is Ekaterina Petrova. I'm a Managing Director of Corporate Accelerator Generation RES from Russia, and we are the biggest acceleration in Russian CIS countries. And we help the Russian corporates and also international corporates to make the ecosystem, to help to find some pilots and startups, to scout in the projects and to do the expertise and acceleration programs. Also, we help them to teach the employees how to work with the corporation. And in our network, we have more than 15,000 startups now in different verticals, and also we work more than in 30 countries. That's why we are here. We would like to ask our experience, how to work with different countries and with different corporates. And last year we was in top best public accelerators in Qatar by the UBI Globals.
Fantastic, excellent, yes.
Okay, so good afternoon. I'm Pierre-Antoine Vacheron. I'm leading the payments business of Natixis. So Natixis is a large financial services company belonging to the French BPCE. And so we as a payment division, we are operating essentially in Europe and mostly on the French domestic market, where we retain 20% market share, present in card issuing, card acquiring, and also account-to-account payments. And I would say what is very specific in Natixis is that it's a very nice combo of processing assets coming from the bank and fintechs that we have acquired. So to give you a sense of what it means, we have half of our teams which are coming from the fintechs which have joined us. So we have some kind of experience in how to integrate fintechs in different modes.
Perfect. No, thank you very much all for the introductions. Just also introduce myself. So I'm Suzanne Chesty. I'm the founder and the CEO of Fintech Circle. And what Fintech Circle does is we invest in fintech startups early stage. We've got an angel network and we provide smart capital for those startups. And we invested in about 20 now. We had 3 exits already. And we also focus on working with banks and helping banks on their innovation journey. And I'm also on the board of a UK bank, and we just acquired a fintech company. So we talk about acquisition models, but equally I've been at a large payment company, which was AIM listed, where we got acquired just last summer. So we will talk about all that, acquiring, being acquired, and how to bridge the culture between large organizations and small startups. And maybe I think that should be the first question to all of you, because you all represent different regions. Jan, Canada, you almost across Europe, Ekaterina, Russia, and Pierre-Antoine, the French market. And maybe Pierre-Antoine, if I can start with you, looking at the French market and looking at what large banks here do, large asset managers, the large institutions, and how you see the cooperation between startups and banks emerging. How is it working in the French market? What can be done better? What works well already?
I will be a bit humble to speak about the whole community. I would say we reached some kind of level of maturity. I think, especially when you speak about the banks, they have tried almost everything very early stage, more mature type of partnerships. And obviously, I think the main lesson is that if it's too early stage, it's much more difficult to do something with a fintech, because obviously the large organization of a bank is not able to work with too early, too small companies where the management is not structured, where the processes are not in line with what you would expect coming from a large bank. But I think we have reached a point where we have this level of maturity. We know, and I mean, I will speak of Natixis, but probably the other financial institutions could do the same. But we know when we have to integrate more. We know when we have to keep as much freedom as possible to the fintechs. We know when we need to invest, when we should not invest. And obviously there are some clear guidelines. For instance, if the business of the fintech is core to your portfolio of products, obviously you need to try to integrate them as much as you can while keeping the way of working of the fintech. But if it is a business which is very, I would say, satellite in terms of value proposition, then the best way to let them grow is to let them manage themselves.
That's a very good advice. So that if it's core to your business, you should try to integrate them. And does it also mean acquire them as well, or is it okay to have a minority stake?
No, I think you can have both, and it all depends on the alignment you get with the management. So in our case, in some cases, we took the full control and we were not able to retain the management. But in most cases, we took the majority and we kept the management for a long period of time. So, for instance, PayPlug, which is on the SME e-com side of things, it's growing, it's doubling every year. And the management, the funders are still managing the company. And there is a very good synergy. Sometimes it's a very tiny minority. So Wind, for instance, in retail solutions, we just have something like 8%, but we have some close connection that helps securing development of a common project. And sometimes they are just customers, so we don't have to invest.
Yes, that's great. And I think the other interesting point you made is that often if it's a startup which is too small, it's so difficult for a large bank to work with a startup. And how can you define, do you see a certain threshold? You know, it's a number of people, is it having to be profitable? At what stage do startups become attractive enough for banks?
I think it's a difficult question. I think it's a question of maturity of the fintech. I mean, if it's mature enough, if it's able to understand where you're coming from, the way you're working, if they are structured enough, then it's easier to integrate them. If they are too young, you don't want to kill their energy with putting too much burden on their shoulders.
Yes, that's great. Thank you. Now let's look at Russia. So Ekaterina, I will come to you now. And I think what we would love to know is more about the Russian market, you know, the fintech market in Russia, and how the ecosystem works there and what you have seen.
Yes, Russian markets are more different than European and American market. In Russia, we have a lot of traditional banks. Usually it's government banks, not a lot of private banks. And but at the last years, we see two cases with the new structure of banks. It's Tinkoff Bank. You know, maybe this is more interesting model of bank, and the second one is the Rocket Bank also, that's a part of model bank. And we see that in Russian ecosystem a lot of banks prefer work by themselves because they have a good competence in the business department and then prefer to make the ecosystem, the new technology by themselves. But sometimes they understand that they haven't any important information, and then they can go to the startup to ask them to analyze the market and to say which verticals is more interesting for the bank. But the bank prefer to work with the startups more than in counterparties. They don't like the buy startup or investment because sometimes they don't know how to do it better. That's why we usually, this work, it's very hard, and for startups it's really better to work with different private banks, because we have in government banks a lot of bureaucratical procedures, and it takes a lot of time to sign the NDA or sign some agreement. And then if the startups is really very good and the startups have a very high stage, the bank usually prefer to work with them together and to cooperate some ecosystem inside the bank. And then we have one case is with Tinkoff Bank. It's the startup named Karmani. The Tinkoff gave them investment more than $1 million, and now they work together and cooperate also with the market and with another banks.
Fantastic. And are those startups and partnerships mostly applied in Leningrad, in Moscow, or across the country?
Across the countries, in Moscow is more, because this is a lot of startups in Russian market now. I think it's more than 300 very high stage startups, which can show their idea not only in Russian markets and all over the world. St. Petersburg is the second place in our countries, and also in our ecosystem and accelerator, we work now with 200 startups, which we can show to the different countries also.
Wonderful. Thank you, Katerina. Now, moving on to you, Antony, if I can come to you first.
Sure.
You look after visas, you know, it was 33 countries, is
35.
it? 35 countries for Visa. And of course, Visa has been in the news in the last week for the acquisition of Blade for $5+ billion. Was it US dollars, I believe? Or was
They
it?
were US dollars, yes.
Yes, US dollars. So one of the biggest acquisitions in history of fintech, I think, which gave lots of hope for fintech CEOs that there are exciting exits waiting, you know, and I don't know how deep Visa's pockets are to do more like that. But there's, I mean, incredibly very attractive, you know, opportunities to exit, obviously, for fintech companies if those opportunities, you know, remain in Visa, but also across the whole, you know, fintech ecosystem. But I wanted to ask you, because you, of course, work across Europe, but you also have got an incredible experience from Australia, where you came from.
Yep.
So what have you seen? You know, how have you seen the partnership evolving between startups, scale-ups, and large incumbents?
Yeah, I mean, look, to be honest with you, I think I'd land where Pierre-Antoine is, in that there is no one size fits all. Every arrangement will be unique, and that can be both the bank and the fintech, and it comes down to the maturity of the bank. Is the bank ready to engage with fintech? Does it really understand what it's seeking to achieve? And Jan and I were talking earlier around, you know, when fintech first came on the scene, banks typically would say, I want to own that, I want to control it, because banks historically have liked to own everything in the ecosystem, and that's really fundamentally changing now. And we're seeing new models emerge, but the culture of the bank, the culture of the fintech, what are the commercial terms that you're striking, what's the strategic importance of the arrangement, how core is it, to Pierre-Antoine's point, to your core operation and the customer experience you're seeking to deliver, what are the long-term goals of both parties. So for me, when I look across the various geographies of Europe, I wouldn't necessarily say culturally there's one model that's preferred over another. The one thing I would say is that, you know, one of the big dangers you do see when you go in too hard too early on a fintech is that the reason a bank typically engages with fintech is they've realised I need to stay at the centre of a customer's life and remain relevant in a world that's digitising. And how do I change my ecosystem and customer experience at speed? If a large bank, and I worked for one for 20 plus years, which has very clear ways of operating and working, you know, acquires a fintech too early, or they're not ready to do that, then one of the reasons, the essence you do it, which is speed and agility and this new way of thinking and reimagining, can be lost. So I don't think there's any one fixed model. You have to step back and really, I think, take each opportunity as it comes along.
And you mentioned before you had like a 100 million budget for in the
Yeah, my previous company, we had a 100 million fund, and that was topped up again with a further 100 million. But we also engaged in co-creation, proof of concept. We had commercial terms as well as investing. So we tried and mixed and matched in all of those models. And I think, again, I come down with Pierre-Antoine. Everybody's trying to learn here. We're all maturing and changing our approach as we go forwards.
Yes, there's no silver bullet. I think that's the solution so far.
No,
You know, there's not one solution.
And Visa's the same. It's the Plaid acquisition. It's something we can't talk about at the moment. It's subject to regulatory approval. But that's one end of the extreme. But we also have very close working partnerships in terms of actually working with fintechs, bringing them into the ecosystem, exposing them into our APIs, skills, capabilities, really teaching them about the world of payments. So again, within Visa, we operate on that full spectrum.
Yes. And in terms of the acquisitions or the partnerships you've been doing so far in Visa, Antony, how long did they take?
For each acquisition?
To become either acquire them or just to make it to your end customers to launch a product jointly?
Well, within Visa, I think it depends on the size of the acquisition, the type of the acquisition. So there's no set time on these things. Some conversations can have been in place for a couple of years where you've actually started to engage with the fintech, and over time you get to know each other better, and you figure out, hang on, there's some wonderful synergy here, and maybe there should be a different relationship that we have. So again, you can't put an explicit time on these things. I'm a big believer in ensuring that you take each opportunity and address it on its merits.
Yes, good advice. And I know from an investor point of view, when we talk to startups who look to raise funding, it's the same thing. We say patience is key, because normally investors also want to get to know you over 8 months, plus before they actually invest. And so one has to have certain patience. And the same thing when you work with corporates, one has to be able to wait and just to kind of do other things in the meantime, obviously, but to nurture those relationships, which at some stage could become, a corporate customer, an acquisition partner, nice exit, but it doesn't happen overnight. Doesn't happen overnight. Now, moving on to Canada, Jan, you are heading up Holt Accelerator, and how do you see the Canadian ecosystem, and what can you report from Canada?
Sure. I'll just take a step back and go over a quick couple of anecdotes that we've seen. Is that, Xerox invented most of the technologies that we use in personal computers, but it's not the world leader when it comes to personal computers. We can look at Kodak, for instance, invented the digital camera and filed for bankruptcy in 2012. Right? And there's other examples that go on. Nokia was a leader when it came to smartphones. It's not a leader anymore when it comes to smartphones. Okay, so what happened here? They saw the future. They had the ingredients, but they couldn't concoct the right soup to feed them for the generations to come. Right? This is the same story that I'm sure happens everywhere, but it definitely happens in Canada for sure. So we're seeing a lot of these banks can't execute right now and it's not always the case. There are some that there's better models that work versus others, but there's a lot of testing right now and a lot of blaming these tests, these experiments. If the experiments are broken, we shouldn't be doing it, but they're just the way that they're constructing these experiments. They're not executing properly. So it runs from anything from transformation labs to innovation labs or co-creation or whatever you want to call it. I'll give you one example that we've seen here. So we had one big bank come to me and goes, like this demo day. We want to do a demo day. I'm like, okay, well, what's your purpose? We just want to engage. Not very clear on the purpose. They start reaching out to startups blindly with not trying to find exactly what departments or who has the needs and within it. Wasting these startups' time will actually come. So they leverage their brand to actually get them to show up, and then nothing comes out of it. So it actually hurts their brand down the line. And you're kind of stuck because you kind of want them to figure this out because they just need to tweak the process, and a whole bunch of successful outcomes could come. But it's just a challenge of understanding what is the objectives. Now, what we have seen that has worked consistently well is, obviously having an executive buy-in, a budget owner or someone to be in there who adopts it, whether it be pet projects internally. But what has systematically worked really well from at scale is the corporate venture arms. And we've seen that time and time again, and I think it has to do with some incentives and alignments between the startups and the corporates in this route, and you can see it at scale. We had one particular bank who had a decent sized fund. They're about 21,000 employees. In the last 2 to 3 years, they've brokered or brought in about 30 partnerships, right? So they strategically invested and had strategic returns. And the conversation has shifted from return on investment to strategic returns. So it's actually working. It's been incredibly fruitful. So I think that's the mechanism. We're seeing a shift from companies going just Series B to Series A to late seed. And they're starting to look, okay, well, how do we do like foundry models right now? So I'm starting to see a bit of I think the corporate venture arm investment is a good way to de-risk and encourage the return.
And are you working with late stage VCs as well to help your companies getting further funding later on?
Yeah, absolutely. Funding is a food chain, and so we can only specialize in what we're best at. So we're good at carrying companies up into Series A. So we work with other corporates who can then come in and invest in those rounds and carry them further with their leveraging their networks and their expertise.
Yes, perfect. That's great. So I think it shows, that no matter where you live globally, actually, we have got similar challenges. I think in terms of working together, large and small. And so what I would love to do is to just ask you all for a case study where it really worked well, like a partnership which was very successful, and to distill for our audience here why it was successful, any lessons learned. And I can start out, if you like, because I am on the board of Crown Agents Bank, and Crown Agents Bank is a UK bank which has got links to the UK royal family. So it's literally the Crown, the royal family's bank for Commonwealth countries. And the focus of this bank is on FX payments, so exotic FX payments, to African nations, Canada, to lots of countries where the Commonwealth relationships exist. And we had to modernize our payment infrastructure and our payment gateways. And we decided to acquire a fintech company, a US fintech company last year. And I'm on the board, so for me, it was really interesting how we went about this acquisition process and how long it took, because I knew the CEO wanted to have it done quickly. I know the company wanted to be acquired quickly. We were all behind it, but it still took a year. It's funny how long things take, and it's because, of course, we were a regulated entity, so we had to get regulatory approval for acquisition. And we decided to acquire the company because of the things what you said, Pierre-Antoine, that they were strategically of importance to us. So we didn't just want to own a minority stake, we wanted to own them completely, because we wanted to protect the IP, we wanted to own it, for our bank. So this was our decision-making process. And since we acquired them, the CEO of the fintech company joined our board. So he's part of our decision-making. We want him to feel part, of our family. And we also want them to continue their innovative way of working. So we are very careful of not destroying the innovation spirit and the fintech mentality, but letting them continue with what they're good at, and we just want to scale it up. We want to use our bank to scale it up. So that's our approach. But maybe if I can ask, let's start with you, Jan, in terms of case studies. What have you seen worked best so far, and what lessons can we learn from that?
Sure. I'll focus. So Canada's a bit of an oligopoly, so you have the big banks, but then you have a whole bunch of credit unions, about 250 plus that are available. So there's a massive opportunity. So I'll focus on one company that we work with. It's Fairstone. So they're on the consumer lending side of things, and they've been, which has been fantastic working with them, as I work directly with the CTO and the VP of their product. So they take this very seriously. We sit down, we have conversations about their problems, their product roadmaps, and they tell me exactly what they're looking for. And they have a commitment to onboard at least 1 to 2 startups per year. They're not looking to invest. It's outside of their budget. It's outside of the strategic direction. They just want to leverage this technology, learn from this, get the branding, but use new technologies to do this. So they've been fantastic partners. And then on the other side, we actually, to give an example of a type of company that went in there, one of our portfolio companies is called owl.co. So it's like a profiling system. I can take your name right there, and I can get 70 data points on it. I can run sentiment analysis, so I can figure out really who you are. So they can grab and scrape all this information, zero knowledge, and I just pass it to the bank to hold it. So the data structure is interesting as well, because the bank's always worried about who's touching the data. So what we found was that was a powerful tool, which originally they were selling this as a supercharged sales bot, right? Because that same profiling information, I could have great marketing campaigns, right, and do super targeted campaigns. But they found that wasn't selling. What was selling at the time, though, and this was around across the board and with all companies, was KYC and augmented due diligence. So you can reflip that tool, change the value proposition, and put it in. And so they got much more uptake there. So the point what I'm trying to summarize here is, at executive buy-in from the very top with people who can control the budget, a strong understanding of their needs and timeline. And I'd say the last thing was super important. In Canada, sometimes we like to be nice. That's the reputation. I don't know if that's true or not. But we like to always say maybe, and that is killing startups. Like, get to yes or get to no and move on. And so working with Fairstone, it was very clear, like, it is a yes, and this is the path to get, probability of yes, or it is a no. And that's, I say, the 3 big things that support the partnership angle.
Excellent, that's great. I wrote it down. So executive buy-in, top executive buy-in is key. Then strong understanding of the timelines and get to yes or no quickly. And what was the third one?
Strong understanding of the needs and the value proposition.
Yes, exactly. Perfect.
Ties to the timeline. Yeah.
That's fantastic. Thanks, Jan. Great example, yes. Coming to you, Antony.
Sure. I mean, from Visa's perspective, probably one of our most successful fintech relationships would be Revolut. So we've entered into a global partnership with Revolut, and I'm sure most people in the room are aware of Revolut. But I see lots of success stories across Europe now. Barclays, I think, has started to build a really solid track record of how they're engaging with fintechs. And in my prior experience, I guess coming back to Jan's points, and these are common points that often get overlooked. They're obvious, but time and time again, when you look at those that are successful versus that fail, you come back to the same things, which are having absolute laser-like clarity on the opportunity you're seeking to focus on, and what's the value proposition. So often you see a fintech who they think they've got this wonderful idea, but naturally the demand simply doesn't exist. I spend a lot of time travelling Europe, and we talk to fintechs as part of our Visa Fast Track program, and there's some wonderful people with great ideas, and they want to change the world, but in actual fact the demand simply isn't there, and the proposition won't actually cut through market. Secondly, you have to have clear alignment from the start, but ongoing dialogue all the way through, because execution plans will change, and fintechs by definition will look to adapt and change, and signing the agreement is actually just the beginning. So you've got to keep that going. And I think to Jan's point, you've hit the nail on the head. You have to have senior buy-in. You've got to have that senior cut through with the decision makers in the corporate. Thirdly, fintech can't be a project. So corporates, there's sometimes a danger of we should do a fintech project or program, and you put people on the project. You actually need to put some of your best and brightest people in the company to drive it through. So of course, Pierre-Antoine, case in point, you've got to have your best performers and the people who can really drive and cut through in the company, making it happen. And then the final one is, recognition that corporates and fintech have a fundamentally different DNA. And one of the things we had to do at Visa was we stood back and we thought, why are we not necessarily meshing with fintech from day one? And we recognised our company was set up to deal with large banks and financial institutions. So we established our Fintech Fast Track program to effectively cut through some of our existing processes and procedures and actually interact with fintechs in the way that they needed to be dealt with. And we needed to give them advice and help and bring them through the system, because quite frankly, Visa could be quite daunting to deal with. So, there's sort of 3 or 4 things that I sort of typically see in terms of what can actually constitute success.
Super helpful. Thank you very much, Antony. Ekaterina, coming to you. What have you seen in Russia? What worked really well?
In Russia, we have, I think, one case is in the government bank. It's bank's Sberbank, and we see the good cases when the bank have the strategy, innovation strategy. They understand how to work the startup, what should they want, what the model they want to work with a startup. And we look that a lot of employees in the bank have a lot of different programs. First of all, last year they made the program with 15 startups together and with Silicon Valley Bank. That's why they have some experience from the international markets. That's why they can work with the startup more faster, because they understand what is a part of the acceleration program. It's more better for them. We understand the stages of the projects. We understand the category of the markets, because it's very important also for each employee who will work with a startup. Then in Sberbank also there is a lot of program to employees, because not a lot of people understand how to make a pilot with a startup. It's really very important, because a lot of companies work like in investment accelerator or invest to the project, but here it's really very important to make a first pilot, to make the first investment to the startup. That's why the CEO of Sberbank have a huge part of employees who can do it. And for us, it's really very important to build all ecosystem in the bank. We should fix work groups with the different people who can work with us at the first step and make scouting and analyze the market and can help to integrate the startup to the corporate. And if we can say about some cases, I would like to say a few words about the Project Vision Labs. It make a cooperation in 2017, and Sberbank acquired 25% of this project, and they make the ecosystem of biometrical ecosystem in the bank and also in the market. They work together, and now they have, after some testing, they have a platform, and now it's have a good project together with different banks now in Russia.
Fantastic. And how many users have you got already? I don't know if you know.
I don't know because it's by NDA only, yes, in the project, but the Vision Labs is the project about the face recognition, and also now they have not only the face recognition, also the voice recognition and another one, and this is the alumni club from the Fintech in Generation S.
Perfect, excellent, that's great. Also very interesting. And coming to Natixis now, Pierre-Antoine, you know, what has been your best case, what you've seen, and what lessons have you learned from them?
I would be arrogant if I was saying that we have many best cases, but the one I would describe the most is probably the case of PayPlug. So PayPlug is a bit like Stripe on the French and Italian markets. So it's exactly the same approach of very easy integration for small merchants who want to start doing e-commerce. And what's interesting in this case is that it was a very tiny company when we bought it back in 2017, and step by step we introduced them in our ecosystem. So, for instance, the acquiring of the flows is done by Natixis, which is another larger fintech. Okay, so Natixis is the acquirer now of PayPlug. We are leveraging on Natixis expertise in POS terminals so that now they can offer not only online payments but also offline payment to their digital merchants. Okay, thanks to this expertise. We are thinking about adding more value to the merchants, for instance, offering the merchants some payment means, like card issuing capabilities, and for that we leverage on Exponence, which is present here today, and which is a partnership on a platform based together with Visa, so that could enable PayPlug to offer to the merchant not only pay in, cash in, but also cash out of what they get. So all this has also supported, and all this integration has enabled PayPlug to go and sign partnerships with guys like Shopify, because they were backed by Natixis, so that gave them a very strong reputation for Shopify, so that's additional growth. And what we are doing now to go to the next step is that we are putting all the fintechs in the same campus. So all the fintechs that we have acquired are coming to the same building, so it's a very large campus with a very nice, obviously, DNA, digital approach, and so on and so forth. And that is supposed to foster additional collaboration between the various fintechs that we have.
That's a great idea. So the portfolio companies which you acquired, which you bought in a stake, or which you're just working with, to invite them to come and work together out of the same fintech campus. And do you encourage them to trade with each other and buy from each other as well?
Yeah, absolutely. And to share expertise when they have expertise in one or another field, because obviously the startups are tiny,
yes,
and when they can leverage on an expertise which is accessible, because it's not the big machine of a large bank, it's much more efficient than we want to leverage on that.
That's great. It's like almost like a VC. VCs do the same, for the portfolio companies. So great model. The other question I wanted to ask you is, of course, now you as corporates, from a Visa point of view, and also Natixis, and from you, Ekaterina, and Holt Accelerator, there are hundreds of thousands of fintech companies out there. And the question, of course, is how do you choose whom to work with? How do you scout for the best fintech partners? And how do you filter them to choose, whom you want to finally sign a deal with? And that's, again, very interesting for all our entrepreneurs in the room, who would like to be chosen, would like to be engaged with. So how do they get on your radar screen? And maybe if I start, Ekaterina, with you, please.
Okay. For us, as I say, also Generation S, first of all, is a corporate accelerator. That's why we make our scouting process like this next steps. First of all, when we decide to work with the corporates, we analyze the all direction in the corporates. We make some business meetings with different direction to understand what technology they are interested in. Then we make some scout, because we have a lot of partners in Russian regions, also in different countries. We work with the universities, with accelerators, incubators, and venture funds to understand which kind of projects they have. First of all, we should understand what is the stage of the project. And usually in our accelerator, we work with a startup with MVP or above, or it can be the mature startup and have more than 2 pilots with the corporates. Then when we look and analyze the scope of the projects, we look at the financial we can understand the financial potential in the corporates. Then we analyze and assessment the scouting with our experts, with Generation S employees, and with the corporates. And then when we understand that the project is really very interesting and we can make the pilot very fast, we understand that we can choose 10 or 15 startups which we can work faster.
Okay, okay. So a very structured approach to filter down to the top 15 or so, 10.
Yes, because at the first stage we have usually 300 startups, and at the end the 10, 15, this is the best startups which we can make the pilot together with the corporate.
Yes. Excellent. How does Visa do it?
Yeah, well, we have dedicated fintech teams all across Europe. So some of them in the room today, and they're always out there scouting and talking to partners. We've got the fast track program, so we often find that fintechs approach us directly, I guess, because of the role we play in the ecosystem. And then we've got close partners. So Ex-Pollens is a key partner of ours now in France, and that also has a pan-European reach. So for us, it's not always them coming directly to us. It's really how can we use the ecosystem more broadly to get that network out there. So we've got pretty clear criteria that we go through, but I'm conscious of time, and I'm sure Jan's got some points there, but it's for us many different ways of finding those partners who want to work with us.
Very good, yes. And Jan, for you?
Well, first, we have our 300 advisors, so we're polling them to understand what they're even looking for, so before we go off. So we have like pages and pages on some of our closest partners to understand what they need. Within our stage, there's arguably about 5,000 to 10,000 fintechs, depending on which databases and market research you're going for. So we're everything before Series A. So arguably, there's anywhere from 40 to 80,000 fintechs globally. So we're tracking that and seeing, we have signals and systems set up so that we can see how they improve over time. And then we're reaching out to these companies. We go to events just like this. After this panel, I'm going to have, another 10 plus meetings before end of day and many more. So we're always boots on the ground. 1,000 meeting per year to understand who's out there. Then we put them through our grading system, right? So we have, what are we looking for? Okay, so the typical VCs are going to talk about founders, right? They're going to talk like, what do they want? The coachability, ability to pivot, founder market fit. Then you're going to look at your product. You're going to look at things like how big your market is, et cetera. But the biggest thing back to us, how we differentiate, is always about fit. And so we include our advisors in that selection process. And actually, we're building that recommendation engine so that we get better and better. We're just a matchmaker. We're Tinder for fintech, right? So we're getting better at building that algorithm over time. And we've actually proved at this point that we can broker up to 30 deals. We only had 18 active investments at this point. So that's pretty impressive, half being with corporates, half being with institutional investors. So the process is working. Again, as we mentioned before, like anything, there's lots of them out there, but I think it comes down to execution and having a good system in place to do it.
And after you have chosen, after you've done the match, how long does it take both partners normally to execute and to come to a proof of concept, a proof of value?
Yeah, it depends. I mean, with going back to the initial Fairstone example, we knew that the timing wasn't perfect because they were actually shifting all of their platform onto the cloud. They're actually one of the first providers, financial institutions in Canada, to be able to do that. That said, they kept us posted on where they would be in that process. So they had their initial meetings, and we're checking them. So about 9 months after that, but keeping us aware of their timeline, they were able to sign that paid contractual implementation.
Excellent, that's great. And coming to you, how would you describe, the way you look for your different fintech startups to partner with?
So, I mean, what makes us different from the rest of the panel is that we have a very small team, so we don't have those many advisors that you guys have. So we need to be very selective. And especially because most of the fintechs and most of the investors think that banks have a deep pocket and that it's pretty easy to go and sell them whatever fintech. So having said that, I would say, I mean, we are very selective in the assets that it can bring to us, either through partnership or through acquisition. The fit with our product suite has to be very close, okay, which was not the case probably in the early days of banks going towards fintechs. So the product, I think it will be increasingly the technology. I mean, the more we are moving towards AI technology, the more we need to integrate probably some blocks that we don't have in-house, and we don't have the time to build that internally. The resources are very scarce, as we all know. So this is what we are looking for. And then I would say the very key point is the quality of the management and the fit with the management. And for that, so we don't have many advisors, but we tend to use our own CEOs of fintechs to assess the quality of the management, because they speak to some extent the same language, they are the same generation, and so it's easier to get their insight and to get their, I would say, their own advice when you take a decision. But it's clear that, especially because partnering with a large financial group, partnering with a bank is not easy for a fintech. The quality of the management and its ability to work with you is a very important criteria.
Yes. That's a good point as well. And I think to add to what you said, what we see at Fintech Circle, we see different approaches from fintech startups who want to come on our radar. For example, one approach we see more and more is a social media approach. It's basically looking, at our Twitter accounts, liking tweets, or retweeting things, reaching out on LinkedIn, joining events, speaking to us in person, like today, to reach out at the conference, meeting us in person. And then I think the more and more you meet people again and again, you feel you really got to know them already. And sometimes, I feel when I know people from social media, then I finally meet them in person, I think I know them already for a long time, although I just had met them on social media, for a few months. But I think nowadays we've got more ways of reaching out to the companies we want to work with, which is great. And it's all free of charge. At the end of the day, it doesn't require a big budget for a fintech startup to reach out to the key decision makers. It just requires almost a persistent, intelligent strategy and communicative approach. So we've got a few minutes left. So I wanted to ask you one final question about predicting the future. It's always hard because we all have no crystal ball. But how do you predict the corporate demand for startups? Have you reached a peak that there will be less interest now, or will it be more interest going forward? What is the trend you see in the market? And maybe Jan, if we start with you, please.
Sure. These always go great when someone's predicting the 20 years in the future, so we'll see what happens here, as long as we don't hold me to my words. But I mean, at high level, the constant bundling versus unbundling is going to continue to happen, so it depends on which vertical and which stage, but the reason that this keeps happening is everything will be commoditized. So it's eventually, as soon as you unbundle or you bundle, there'll be ways to break it back down to unbundle again and then repackage again. All that means is that there's going to be a lot more partnerships in that process. So that's what I believe in. I think it's going to keep happening. It's only going to accelerate as soon as we get in, and it's only going to increase as we get better at sharing data, and there's better data structures and policies surrounding that. So I only think the trend is starting, and we're only at the beginning of it right now.
Great, excellent. For you.
I just wanted to underline your point on relationship is incredibly important. I think everybody's touched on that. Fit and culture. If a fintech wants to work with a large bank or corporate, having that relationship just can never be underestimated. It's probably the key thing actually in every decision. But for me, the title was already the end or just the beginning. I definitely don't think it's the end. I think the corporates will continue to work through this, partly because there's a question now about what is banking. And I was just with a regulator before this meeting, we were talking what is banking, and the whole idea of banking can be broken down and repackaged into modules or Lego blocks, however you want to describe it. So banks will increasingly start to think about, what do I need to do, what can I orchestrate, what can I package and deliver. Secondly, linked to that, I think open banking is only really now just starting to have an impact. The regulation has been in place for a while, but as an industry, we haven't really seen open banking have the impact that many predicted 2 or 3 years ago. But it is now starting. And so I think there'll be a lot more activity, and open banking will enable many different types of relationships to come through that haven't been there yet. I think RegTech is an area where banks are really still scratching their heads around. Regulation is increasingly expensive. It's difficult to solve. Traditional approaches are not necessarily working, and it's something you have to do. You have to be compliant. So I do think there's going to be a lot of opportunity for RegTech. And finally, though, there will be a shakeout. And this is a natural part of the cycle. A number of fintechs have been in operation now 3, 4, 5 years. The market won't necessarily continue to fund them. And that's not to be unexpected. They'll either reinvent themselves, they'll go out of business, others will be tremendously successful and grow. But I don't think we've really seen that come through yet, and we're at that stage in the cycle now where you'll have that sort of clean out and we'll go from there. But overall, no, it's definitely not going away, it will continue.
So almost at the beginning or kind of in the middle?
So the next phase.
Next phase, perfect, Antony. Ekaterina, what's your views, what are your predictions?
Okay, I would like to ask maybe 2 cases which I see when we work at the end of the year to 2018, because I think that fintech is more sectoral for the future, and I see it in 2 our accelerators. First of all, in the Pepsi accelerators last year, they make a strategy for the big data and work a lot with fintech startups. And the second one, the case with our partner with NL Group. This is energy international company, and we find a lot of industrial startup, but we see that they have a direction, they're interested in direction of the blockchain startups. We can help them to make the green certification. That's why I think that fintech for the future is more sectoral. Here is a lot of interest in different types of the startups, but we can understand how to integrate and how to help them to understand each other. And there's some partners like accelerators, and another one can make to can help to translate each other, and then all will be successful.
Yes, good. Excellent. Final predictions, Pierre-Antoine?
So I think there is, and I would support the comments of Antony. I mean, we are just at the beginning. For many reasons, open banking is just a starting point. RegTech are just starting. Artificial intelligence is just hitting the European and the more mature countries, and for that we need fintechs obviously to go faster. But I would add one additional comment, which is that the corporates are moving themselves as fintechs. I mean, we are all shifting towards open platform. We are all moving to the cloud. We are all offering open API to our partners. And obviously for us, it's much easier to work with fintechs, with startups than it was in the past. And for startups, it's much easier to grab the value from the corporates than it was in the past. So here again, we are at the very beginning of this revolution. And I'm pretty sure that there will be many fintech forums like that in the years to come.
Wonderful. So I think that's a wonderful conclusion of this panel, that the corporate appetite for fintechs will be growing going forward even more than it has been, because now I think it really, reality hits home. You know, we need to deliver things at scale. And I believe that one of the key skill sets, therefore, both sides need are the ability to sign and develop partnerships. You know, the ability to bridge different cultures, different organizational styles, and to really develop, define, nurture very meaningful partnerships. I almost think we should teach that in school, if you can teach those skills. But I think both for startups, but also for large companies, it's a competitive advantage if you've got this ability, you know, to really have these meaningful and growing partnerships. With that, I would like to thank my panel members very much for all your insightful commentaries and insightful comments, and sharing your expertise. It was excellent. And please share me and give them an applause.